So the big question is this: how do investors like us who trade options and manage our own money generate income regardless of where the stock market goes, and do it all in a way that lets us make time for the people and things we love, and yet still build wealth and remain profitable? That's the question, and this podcast will give you the answer. I'm your host, Kirk Duplessis, and you're listening to The Daily Call from Option Alpha. Hey everyone, this is Kirk here again at OptionAlpha.com, and welcome back to The Daily Call. Today we're going to run through the basics very quickly of how to set up a short strangle. So a short strangle is an option selling strategy. It's one of the core strategies that we actually trade here at Option Alpha. I really believe in this strategy as the basic building blocks of a lot of different strategies that you can start to set up. But a short strangle is effectively created by selling an out-of-the-money short put option and an out-of-the-money short call option. Now, how far out you go, how many strikes out you go, is up to determining the position that you are in and how often you want to win, what probability of success you want to see, and also how far out you go in expiration. So there's a lot of factors and moving parts here. There's no one right answer. There's no unicorn strangle that always works in every market environment. So we encourage you to backtest your strangles and your setups and try to optimize for the best setup for whatever market environment you're in right now. But the idea with the short strangle is that you sell options that are far out of the money and you take in a premium, but you still remain neutral to the overall move. So for example, let's say a stock is trading at $100. You might sell the 110 call and the 90 strike put option. And so the stock has to trade basically within a $20 range. It can go sideways, it can go up, it can go down, but as long as it stays between your short strikes at 110 on the call side and 90 on the put side, you'll keep all of the premium that you sold in selling those option contracts together. Now, again, how far out you go with your short strangle determines your win rate, but it also determines how much money you take in. So remember, there's no free lunch in the market. So if you sell options even further out, you probably have a higher probability of success because now the stock has to make an even bigger move than, say, a $20 range that we talked about earlier. So say you sell options at the 120 calls and the 80 strike puts. Well, you have now a $40 range that the stock can trade in and you can make money. But because the markets are efficient and fair, that means that the amount of money that you make, if the stock does land in that range, is going to be dramatically lower. So we start to see that option premium starts to tail off or starts to decline the further and further you get out of the money. So there's got to be some sort of sweet spot in many cases and in many market environments. We think there is based on back testing. Where the sweet spot is in setting up these short strangles, how close or how far you set them up, and how far out in expiration time you set them up. Do you sell options 30 days out or 60 days out? Is there a breaking point that ends up working better right now versus in another market environment? So again, what we want to do is just present basically a quick guide of the basics here on how to set these up. And hopefully this at least gets the ball rolling if you're new to options trading, if you're new to option selling, on how to use options to profit from a range and sell options for monthly income. So as always, if you guys have any questions or any additional comments on these, let us know. Just shoot us a message on Facebook, Twitter, Periscope, YouTube, LinkedIn, etc., and we'll be able to help you out and point you in the right direction. As always, we have additional free courses and training on all of these strategies on our website for free, so you just have to sign up at OptionAlpha.com. Until next time, happy trading. Thanks for joining us on The Daily Call. Be sure to subscribe right now for more daily options trading ideas, strategies, and tactics to help you learn how to place smarter, more profitable trades. And if you like what we're doing, don't forget to give us a rating and a review so we can continue to bring you the best daily content possible. We'll see you again tomorrow, right here on The Daily Call from OptionAlpha.com.